So this is 1 kilo of gold. Now, why don't I trade it up to a 1 kilo gold bar instead of all these different coins? Sovereign Saurus here, welcome to a new video. So today we're going to talk about the idea of trading up when it comes to assets. So here's an example. You buy a house and you maybe do a little bit of work, maybe you just wait for a while, but you ultimately raise the value and maybe position it better, take some better photos, whatever that might be, and ultimately you take a profit, buy a bigger property and work your way by flipping higher up the food chain. Maybe you swap two small houses for a bigger house. I know you don't really swap houses, but maybe you sell them both to buy a bigger. You know, maybe you do that with a spouse or a partner, something like that. So, when it comes to gold in physical form, it doesn't really work like that. It works a bit differently. So, in terms of what you can do with gold, we'll cover that in a moment, but gold works a little bit differently. And by the way, I just picked this up, beautiful 2020 Brit, and it was less than 1% over spot, and that's delivered in my hand. So, yeah, happy with that. Now, when I say gold works differently to some other assets, you generally pay lower premiums for bigger pieces of gold. The exception really in the UK is probably the sovereign. You can often get those at a low premium as well. But your average 10th coin or 1 gram bar, something like that, from a dealer is typically going to be 10-20% premium and above. You know, maybe you've got to pay postage as well. Sovereigns, other 1 ounce coins, you know, you can generally get those between 3 and 5%, and often even a little bit less. So that's above the intrinsic metal value. So I took a look at 1 kilo gold bars, so you didn't have to. And while spot was about 1848 in US dollars, that was about 14.95 in British pounds. The cheapest I could find a bar was 49,069 pence and 69 pounds, sorry. So that's about a 2.3% premium. If you don't work in pounds, no worries. A 2.3% premium, okay? Now, I did get that at an exceptionally good deal, but that was obviously a little bit less even. So, if you were going to immediately sell the bar back to a dealer, you would obviously be at mercy of the spread. Now, when I had a look, the best offer from another dealer to sell the bar immediately would have been 47,134. So, aka, that's about 2% under spot. Now, maybe you could haggle, maybe, you know, you'd get a slight bit here and there, but we're looking roughly at a 4% spread there before any negotiations. And ultimately, the difficulty is, you know, you can't really post the kilo bars easily in gold, so you're probably going to have to deliver it. You know, you're going to have to go somewhere. And yeah, there's just generally less flexibility for the prospective buyer or the dealer who is purchasing it. So when you compare it to something like Gold Britannias, you know, loads of people would buy them. There's a lot more market for them. And if you instead bought them, you know, you might have paid a 3% premium. So I found a dealer that would sell at 3.3% premium delivered to your door. So yes, you're paying just over 1% more than the kilo bar, but you can easily sell the Britannias back to a few dealers at spot price. So your 3% spread is lower than the spread on the kilos. Now, that's an interesting point, but also you have, you know, more options. You can sell the smaller 1 ounces at, you know, little batches. You could sell 1 or 2, you could sell all of them. Whereas your kilo bar, you're going to be sort of stuck really. You're going to have to either chop it up, which is then, you know, totally just scrap value, or you've got to sell the whole lump. And trying to find a buyer for one big lump, you know, we're talking nearly £50,000. A lot of people don't earn that in a year, but I know a lot of people who are buying gold might earn considerably more, but it's still just, you know, how many people want to spend that much in one lump or invest in one lump? You know, considerably less. Now, I know I've made the argument for things like half sovereigns and 10th ounce being less optimal for stacking because you've got to sell a lot of them to get any real money in. But, you know, if it's such a problem counting out hundreds of these 1 ounce gold coins, maybe you just put them in a tube, you know, and weigh the tube, you know. It's a good problem to have, and one I would welcome with open arms. Now, the only other thing to consider is on your kilo bars, you are not protected from capital gains tax, so you would have to pay capital gains tax on any gains that are outside of your allowance, you know, due to the current rules in the UK. So, whilst I'm not a tax advisor, it's just those are the rules. So at the moment, Britannia's, because they have a face value in pounds, so in this case £100, you know, the sovereign, although it's not printed on the coin, it does have a £1 face value, you are protected from the capital gains tax. So if you did make a profit and it was over your allowance, you would still not have to worry about paying additional taxes. So not only would you be more flexible with, you know, multiple options and the ability to just break it down into, you know, any amount, 1 ounce amount, you'd have 32 of those to do as you please. It would just give you a little bit more money in your pocket at the end of the day as well. So as an example, how you actually could trade up in gold. So let's say you bought a 1 ounce coin, maybe it was 1300 at spot price a little while ago, and what you do then is you trade it for perhaps 4 special sovereigns. So somebody wants to offload those, you swap them, and you end up with a little bit of cash your way. You get rid of the sovereigns. You then sell the sovereigns, and you end up with enough money to buy another 1 ounce coin, plus you've got that little bit of cash that you had left over. So you can then buy maybe an additional sovereign, and whilst you've not traded up to a bigger piece, you have gained more gold for the same initial input of money from your part. So another really simple example, perhaps you would buy a coin and maybe it was a proof coin, maybe you would pay £500 and you would get it graded, you'd pay £50 to get it graded, and it would come back with such a grade that makes it more desirable, and then you could sell it for £700. So you'd take that 150 as profit, you know, nearly 25%, and it'd be a nice little earner. So even if you don't sell it, you could keep the graded coin and just have it in your stack. You know, you've added value to it. It's now worth more money, and you can therefore move along happily, you know, not necessarily having to sell it, but you've just got more value in your stack for the same initial input costs. So thanks for watching. Hope you enjoyed the video. Let me know your thoughts below. We'll talk soon.